Welcome back to Explain the Charts, where we break down the most significant market movements through a technical and fundamental lens. Today is May 1st, 2026, and the big story is Apple Incorporated, trading under the symbol Apple, which has just experienced a massive post-earnings surge. As we open the daily chart, you can see a significant gap up as the stock is currently trading around $283.64. This move comes on the back of strong fiscal second quarter results, where Apple reported a 17% revenue growth and an upbeat guidance outlook. Investors are also reacting to a dividend hike and an expanded share buyback program, which are classic bullish catalysts for this tech giant. However, the news isn't just about the numbers. It is also about the future leadership of the company. Tim Cook is set to step down this September, with John Ternus taking the reins as the new CEO. The market seems to be viewing this transition positively, specifically highlighting a shift toward product-first innovation and edge AI strategies. Analysts are already raising price targets, with some reaching as high as $350 per share. But we must remain objective because there are significant headwinds, including regulatory scrutiny and global supply chain risks. Now, let's narrow our focus to the price action of the last few months to understand the context of this reversal. In early April, we saw Apple dipping toward the $250 level before finding significant support. Looking at the data from April 30th, the stock opened at $270.50 and closed at $271.35 just before the earnings release. The massive green candle we see for May 1st represents a total breakout from the $270 resistance zone that had held the stock back for weeks. This breakout is confirmed by high trading volume, with over 38 million shares moving in just the early part of the session. Correlating the chart with the news, the surge to $284 aligns perfectly with the upbeat guidance provided during the earnings call. While the tech sector is booming, we must keep an eye on the broader market conditions. The Dow is attempting to reclaim 50,000, but inflation is hitting a three-year high due to the conflict in Iran. If oil continues to trade at $125 a barrel, it may eventually exert downward pressure on consumer-facing tech like Apple. Furthermore, some community sentiment suggests the stock is pricing in perfect growth, which makes it vulnerable to any negative surprises. Switching over to the 1-hour chart, we can see the intraday mechanics of this rally more clearly. Notice the massive gap between the close of April 30th and the open of May 1st. The price jumped from approximately $271 to over $283 almost instantly as the market digested the earnings news. In the first few hours of trading today, the stock has been consolidating near its new highs, which is a very healthy sign for bulls. If the stock can hold above the $280 mark on this time frame, it establishes a new base for a run toward $300. Looking at the transactions, we see over 700,000 trades occurring in single-hour blocks, indicating intense institutional interest. Short-term traders should watch for any attempts to fill the gap back down toward $275. However, as long as the 1-hour candles remain above the VWP of $281, the momentum stays firmly with the buyers. This consolidation period is likely where the smart money is accumulating positions following the initial news spike. The next key level to watch on this chart is the $285 resistance, which has acted as a temporary ceiling today. Let's zoom in even further using the 15-minute chart to see the volatility surrounding the earnings announcement. On April 30th, during the final minutes of trading, the price was relatively stable near $271. Then, as the after-hours data began to flow in, we see the 15-minute candles spiking violently upward. The price hit $282.96 in a single candle, representing a massive 5.29% jump in a tiny window. There was a brief pullback to $277 before the bulls regained control and pushed the price back above $280. This type of V-shaped recovery in the after-hours session shows that dip buyers are extremely aggressive right now. The 15-minute trend shows a series of higher lows throughout the morning of May 1st. This indicates that the market is not just reacting to a headline, but is fundamentally revaluing the company. For day traders, the $281 level is the immediate support to watch for entries. A break below $278 on this time frame would suggest that the initial earnings hype is cooling off. Returning to the daily view, let's establish our key support and resistance levels for the long term. Primary resistance is now the psychological $300 mark, followed by analyst targets at $303 and $350. Major support is now situated at the previous breakout point of $270 to $272. If the stock fails to hold $270, the next significant support zone doesn't appear until $255. There are several reasons to be bullish right now, including the Edge AI strategy and the leadership transition to Turnus. On the bearish side, the P/E ratio is now at a lofty 35.86, and the reliance on iPhone sales remains a structural risk. Geopolitical tensions in the Strait of Hormuz could also weaken the US dollar and impact global tech demand. Investors should also watch for the partnership between Qualcomm and OpenAI as a potential competitive threat in the AI chip space. Despite these risks, the technical structure of Apple has shifted from a neutral consolidation to a definitive bullish breakout. We are currently in a price discovery phase where the market is testing how much premium it will pay for Apple's AI future. To recap our analysis here on Explain the Charts, Apple has staged a powerful recovery based on stellar Q2 earnings. The key price levels to remember are $285 as immediate resistance and $271 as the must-hold support. In terms of predictions, there is a 70% likelihood that Apple will test the $300 level within the next 30 days. This scenario is reinforced by the ongoing share buybacks and the lack of immediate technical resistance above current levels. There is a 20% chance the stock consolidates between $275 and $285 as it waits for the WWDC event updates. We only see a 10% chance of a full retracement to $250, which would likely require a significant escalation in global conflict. Looking ahead, keep a close eye on inflation data and any further news regarding the CEO transition in September. The trend is currently your friend, but always keep an eye on the gap fill potential if market volume starts to fade. Thank you for watching this in-depth analysis of Apple stock on May 1, 2026. Please remember that this video is for educational purposes only and is not financial advice. Always do your own research before making investment decisions.